Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino for your weekly stock market sector overview. How is everyone doing? By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting that like button. Longer-term subscribers, please like the videos and leave some comments. All right, let's get straight into it. This is being recorded on Monday, June 20th. The futures just closed a little while ago. The stocks are not open today. So you see, lots is very challenging right now. First off, I'm going to mention something. A lot of daily cycles are at the bottom, but weekly cycles are at the top. So you see daily cycles at the bottom, weekly cycles at the top and rolling over. Weekly trumps daily, so we could be into some choppier, even with some upward price action from the daily signals. It could be choppier and then roll over again. Keep that in mind. XLE, huge sell-off. I've been talking about raising stops on energy stuff. We finally got the big sell-off, down 17% in 1 week off the harmonics up here. So still in long-term buy mode. I just don't have any short-term pattern yet. So being very cautious of energy. If we do get a daily close in the next couple of days back above this high from Friday, which is 77.77, there is a very aggressive buy signal, and then maybe look for some outperforming energy stocks that have reliable patterns. Otherwise, I'm stepping aside in energy until I get a stronger pattern. XLRE still in long-term sell. This other double never triggered. Remember, because something's a potential reversal pattern, we have to wait for it to trigger. Now, we have a little against the harmonics. You see we stalled out here against the harmonics. I'm going to roll those on down now. But we do have a little potential double bottom on a daily close above this high, 40.36. That triggers it, 41.22. 41.66, 42.09 against the daily rotation zone, but the trigger's in there, so I really focus on the first and second targets when that happens, because even if this comes down, we can eke out potentially the second target. That's about it. That is a very aggressive real estate bounce play, and you do have a gap. Again, real estate, the daily cycles, they've turned up more, but not at the top. But the weekly cycle's rolling over. So again, this is just a very aggressive play in real estate. And it would be just for a very short-term bounce. And it doesn't have to trigger. This could easily break to new lows. And the next major pattern, or next major support, is 37.09 area. It's where it's getting very challenging right now. XLF, stalling out against the next harmonic. Again, double. Potential double from earlier did not trigger and now is off the table. You see here long-term mode, completely still in sell mode. And we're just not finding a lot of good things. So bounces are very aggressive. Keep that in mind. That's where we sit right now with the with these bounces. So, what are we watching for with XLF? It held up pretty well. I'm very cautious on financials, but you got daily turning up, weekly turning down, have this gap left behind. If you do get a small bounce, the key area is 31.97, and that's the only super aggressive play I have. You still have, if it closes tomorrow above Thursday's high, that's just an aggressive bounce play back to the rotation zone. So if there's any outperforming financial stocks, that can be a little quick trigger if we do get the bounce in the broad market. Other than that, a lot of these, we can get the bounce, roll over in the rotation zone, and XLF still not looking very strong overall. If it does break down about 29.59, I'm leaving the harmonic there with this intermediate stopping point because we do have a very significant cluster at this 2960, and that's also the 50% retracement from this up move from the COVID lows. So that's where I'll start really looking for some more potential reversal signals that are stronger lower. So it's only this quick little potential bounce play for the next move and then a rollover play. XLK technology, again, stalling out against the harmonics. The double from before never triggered. So now I have to move these over here. And the aggressive play is a close above Thursday's high. Thursday's high was 123.49, and that's valid for next day or so only. And then I'd watch for a return to the weekly rotation zone. There's a gap fill play here. So you see from the 15th close to the 16th open, there's a gap fill play, and that coincides nicely with the rotation zone. So that's the only super aggressive play in technology that there is. And so I look for outperforming technology stocks if this were to trigger. Again, daily cycles turning up, weekly cycles starting to roll over. So these bounces can be very short-lived and also still in long-term sell. I'm sounding like a broken record, but that's where it sits. Industrials. Spider Select Sector Fund Industrial in long-term sell. I'm sorry for being so repetitive, but this is where we sit right now. Thursday closed at the harmonic, then the spike lower. Next area, we'll roll these on down. We'll just use the short-term ones for a bit. Not a lot of great setups. XLI would need a daily close above Thursday's high at 87.06, valid for the next day or so, and then it would just be a return. This one I probably won't even bother with because 87.60, and then it would be 88.72 against the rotation zone, and this is very super weak. Daily cycle's not even turning up yet, and weekly's coming down. The only interesting thing is this has hit the 200-week simple moving average, which we're going to see how strong that support is. This is a sector, unless we do get that aggressive buy trigger and then we do have a gap fill up here, I'm pretty much sticking clear of. If it does not trigger that aggressive buy, not really shopping for any stocks in that sector. Consumer discretionary, still in long-term sell. Yes, this is still technically a double bottom. Long way off from triggering, but we'll make note of it. Aggressive buy, again, above Thursday's high. Aggressive buy 137.72 against the daily rotation zone. And the key areas that I'd be watching is about 140.40 to about 140.80, right in front of even the full gap fill. So if this does trigger this little aggressive buy, consumer discretionary could be in for a little bump up. There's lots of shorts in consumer discretionary also, so there could be a couple short squeeze plays. So those are the stocks I would be investigating for that. If the short squeeze goes higher and fills the gap, then there's still another gap here right in the middle of the rotation zone, which comes to about 144.50. So that is a sector. If we start getting short squeezes and a little bounce in the market, I will look to see if there's consumer discretionary short squeeze plays, but long-term still in sell mode. XLP, consumer staples, just absolutely getting hammered again. Some of these consumer staples I'm a little surprised at, but they were a lot of value stocks that still weren't at value levels. The only play right here is a close above Thursday's high also. But again, your breakdown zones right here against the daily rotation zone. So I'm really waiting for a stronger pattern. 70.40 is about the key target on that. Cycles at the bottom have not been able to turn up yet, and weekly trying to roll over again. So I'm sticking clear of pretty much consumer staples until we get a stronger pattern. XLV, healthcare, never triggered that double and just got sold off. And again, this is in a sell signal that triggered last week and continued lower. Not really interested in XLV at all at the moment. It tried to trigger an aggressive buy signal, could not get a move on. This is, I'll be watching for a potential bottoming pattern. We don't have one yet. Major resistance on a rally is 122.50. I'm steering clear of this sector pretty much whatsoever because it could just bounce and then roll over. XLB, the material select, absolutely brutalized here. Big sell-off. So that is in now full-blown sell mode. So again, another sector in long-term sell mode. That's what there's just not this market, even we can get rallies, but not a lot's in a good position, which should tell you something about the long-term prospects, even with short-term rallies. Lots of things aren't behaving well. Aggressive, if we still have a gap fill here. There is an aggressive buy above Friday's high on a closing basis, which is 74.92. And then I'd just be watching for this gap fill play. And if there's any, I'm still interested in this, even though it went to a long-term sell. Still interested if this does trigger a short-term bounce pattern because of the amount it's oversold. RSI is at the bottom, and it's a fair way off from its daily rotation zone. So that would just be a quick bounce play on an outperforming materials stock. If you're wondering, well, how do I find these stocks? Okay, what you can do is go to ETF.com and punch in like XLB, and it will tell you their holdings. And then you scan through the individual stocks and look for plays in those individual stocks. That's the easiest way to do it. Or you can always go to a heat map or something else, go to that sector, and then see what's been outperforming. And I'm not talking outperformance on a day. An outperformance can be to the downside. Like, let's say the sector got beat up. For example, the sector here got beat up to a point of 8.26%. Now, let's say a stock only got beat up 1%. That could be an outperformance because if we get a bounce, that can outperform now to the upside. So do keep that in mind when I'm talking outperformance. Communications, again, it's been a long-term sell. When did this trigger? Back in January. This is actually held up a little better. I am watching for the aggressive buy to trigger tomorrow, potentially above on a closing basis above 54.17. Then I will look for any outperformance communications stocks. We do have a gap here, and that could be back to a reconnect with the rotation zone. Cycles turning up on the daily, turning down on the weekly. So again, this would just be a very short-term bounce play on not underperforming, but outperforming communication services stocks. If I can't find it, we also did get a divergence down here with the RSI. So it's might be putting in at least a short-term bottoming pattern, but not a medium or long-term. XLU, utilities, sell mode. This is again 9% down. This is pretty much off the table right now for me. There is an aggressive buy above Friday's high again. That would just be on a slight little bounce play, but I'd have to find a really strong outperforming utility stock for me to get interested because that's a super aggressive buy pattern. Daily cycles at the bottom, weekly cycles rolling over. And this is just a very brutal bar, especially with the interest rate situation. Remember, utility stocks are very sensitive to rising rates. So that's why anything in that would just be a very quick play. XRT, retail ETF, double bottom still in play. We hit, remember, we closed below the 62.5, and we came back down this 87.5. So that is pretty much, at least statistically, filled that little statistical probability that it would go lower. Yes, it can still push lower if the market does sell off. The next retest would be of the lows. There is an aggressive buy above Thursday's high, valid, and then it would be for the gap fill play. There are a couple gap fills. I am interested if I can find some retails that are outperforming, just because it could roll into a bigger pattern, but that has to be outperforming retails. Cycles are turning up on the daily, trying to roll over on the weekly. Okay, so if there's an outperforming retail stock, I would consider, if this aggressive buy does trigger, to jump into that for a short-term play. Again, all these are very short-term plays. When we get bottoming signals with the weekly and the daily both at the bottom, and then we have stronger buy patterns, that's when we don't have to be as aggressive, like saying, okay, I might just be in this for 1 or 2 days. We might be in something for a week, 2 weeks at that point. We're just not at that point yet unless something drastically changes in the market. Even with the futures, they're both, dailies are turning up, weeklies are turning down. So there's still a mixed message in there. So even though we're having doubles, which I'm going to cover in the live streams that are there, we've had one triggered in the NASDAQ and the S&P. Those are short-term double trades. Those are short-term bottoming positions, not long-term or not medium-term. IYT, transportation, the double that never triggered off the table. Aggressive buy above Thursday's high. So that's where we sit with that. Let's see. And that would just be for a gap fill play. So transportation, if I can find something outperforming, I will be considering that. Long term, still in sell mode. Short term, because of this aggressive buy and we have that nice gap back to the daily rotation zone, I'll look for outperforming transportation stocks. DBC, still in, this is commodities, commodity index, still in long-term buy. Nice little reversal coming in here. So I'm being patient with this. We are getting a little toppy still. Broke below the daily rotation zone. Could not get a solid rotation back up. There was a potential solid rotation play above with Friday if it could close above Thursday or close above Wednesday. So Thursday closing above Wednesdays did not trigger. Coming back down to the 50. Cycles are at the bottom on the daily and rolling over on the weekly. So I'm just waiting for a stronger pattern in here. Because even on a bounce play, we could then roll over again and then form a stronger bottoming pattern. Sticking clear of commodities at the moment. Agriculture, pretty still long-term buy, still potential double top play in there. And shorter term, just looking like a mess. No strong plays here just yet. So I'm sitting on my hands with agriculture. Semiconductors, remember, we're still in long-term sell mode from the one system that's with the purple line. Purple lines also are in sell mode from this head and shoulders top and now heading back down towards the next target. The double that never triggered off the table. So yeah, there is an aggressive buy above Thursday's high, but that would just be reconnecting with the rotation zone. So if that does trigger, I'll see if there's any semiconductor stocks that are still outperforming the market, but that could be just a 1 or 2 day play. I'm expecting this to head, again, lower, longer term cycles, trying to turn up on the daily, rolling over on the weekly. Real area I get interested in semis is now once we reconnect with the 200 on the week and this full pattern from the head and shoulders top. Then I will start getting more potentially aggressive with semis. Gold miners. Gold miners is technically still in a long-term sell. What would be interesting if it does pop up and trigger this little double bottom, which is still in play, then we could shift it to a buy mode. But I'm being patient with this. Now, there's no aggressive buy pattern. I really needed to get back above about 31.72 before I start looking for any gold miners. And then I really get interested if it triggers the double. And the targets have to be changed on that double right now. Vanguard value just getting absolutely beat up. This is in a long-term sell. So values in long-term sell, gross in long-term sell. That should tell you something about this market. Okay. So does that mean you can't find short-term plays? No. It means you just have to really be picky with them. So in value stocks, we do have an aggressive buy above Friday's high and that would be return to some of these gap plays and the daily rotation zone. And again, it have to be an outperforming value stock. And I'm only looking to them either that has a short squeeze setup or actually has decent fundamentals. If it's still completely overvalued, value stock, steering clear of it, I'm only going to choose the moderately valued value stocks that are showing buy patterns. This double on growth, VUG, is off the table. Boy, this is the kind of market we are in. Very patient. Growth still has a close on above Thursday's high. I was watching for this on Friday, but it did not trigger. The close would be for tomorrow above 218.32, and that would be a return to the gap with the daily rotation zone and the breakdown zone and the 12.5% harmonic. 223.75 area. Okay, cycles are trying to turn up. I will look for mega cap growth plays if the market does continue strong. I'm still interested for a short-term bounce, interested in some mega cap growths that are outperforming, or growth stocks, junk growth that are in a short squeeze pattern. And that would be for just a very short-term play. Again, these could be 2 or 3 day plays at most. So we growth trying to turn up, but the weekly rolling over. That's why it could be for, again, short squeezes can only possibly last 1 or 2 days before we get rolled over and then try to form a stronger bottoming pattern. Sorry for sounding like a broken record. Sorry for not having a bunch better news. Sorry for the camera being slightly off with the tie-dye. But, you know, it is tie-dye summer for me. And I will keep wearing them. So, please, again, if you're new here and you find value, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers and subscribers, please leave some comments and like the videos. And then until next time, I will talk to everyone later. Bye.